if the economy gets bad enough, the Fed's going to ease, and so all of a sudden they get worried that it's an economic metal. Silver's going to go up because of the economy. Silver should just go up, and that's what's going to happen. This is the recessionary fears keeping silver down. But look at how much they kept silver down last year, right? We're making a higher high at the most bearish time, higher low, I should say, at the most bearish time of year. And we're entering into the most bullish time of year. I don't want to be a cheerleader. I just want to say to you, you don't want to be long gold. You want to be long silver in the next leg higher.
In a recent video shared on Arcadia Economics, VinceLanci delves into the economic indicators signaling a potential slowdown. He examines the response of notable Wall Street analysts to this data. Lanci discusses explicitly the likely implications of these trends on the gold and silver markets. On Tuesday, spot gold experienced a marginal 0.3% decline, sliding to a nearly one-week low. Notably, gold prices have shown resilience despite prevailing 22-year high interest rates. However, analysts at Heraeus suggest that for gold to rally convincingly above the $2,000 per ounce threshold, a clear dovish signal from the Federal Reserve will likely be necessary, as outlined in their latest precious metals report. In contrast, while silver has rebounded from recent lows, it continues to lag behind gold. Lanci implies that holding a long position in silver might offer more advantages for the forthcoming significant market move compared to gold. Recent market sentiment swayed towards the belief that the Federal Reserve could cease its rate hikes following soft U.S. October non-farm payroll data. This sentiment was echoed by Neel Kashkari, president of the Federal Reserve Bank of Minneapolis, who indicated that the central bank might have more work to control inflation. Lanci asserts that if the economy worsens, the Federal Reserve might lower interest rates, positively impacting silver. Join us as we delve into insights shared by VinceLanci in his recent video. To stay updated with our latest uploads, be sure to subscribe to our channel and activate notifications. Thank you.
Silver on the left, gold on the right. Look at gold, look at silver. Gold's done really well. All this whole V-shaped bottom in silver and gold, those are markets reacting to the Israel war. And even though oil's not up, right? Because this is not an oil-based instability. This is I'll tell you guys, this is extremely encouraging for precious metals. What I mean is, historically, during a war in the Middle East, that did affect oil. Oil would go up and gold would go up, right? And silver would trail gold, right? Historically, in a war in the Middle East where oil wasn't affected, like in Israel, which is what's happening now, oil would go up, gold would go up, oil would go down, and gold would go down more. We haven't gone down, right? And silver is also sticky. Volatile, not as performing as much, but sticky. This is what's going to happen. Go back to the heart of the thing now. If we have a recession, or if we have, and we're almost definitely getting one now, and it's not necessarily just because of us, the rest of the world has having problems. And we're causing the problems, but that's how it works, right? So if we have a recession, you're going to see, or if we have recession, Americans feel the Fed will lower interest rates. Now, I don't know that they're going to lower interest rates, but the closer we get to that eventuality, the more they rally. Now, what do you have? You've got the wildebeest CTAs out there that keep shorting silver and buying gold. They're doing it. They keep short. Every time gold rallies, they're buying gold and they're selling silver because the economy stinks. I want to buy. Well, that's it. Silver's not an economic metal as much as they think it is. Silver's a precious metal, and eventually, if the economy gets bad enough, the Fed's going to ease, and so all of a sudden they get worried that it's an economic metal. Silver's going to go up because of the economy. Silver should just go up, and that's what's going to happen. All right. So gold's down $9, silver's down 14 cents. You know, like second or third highest all-time close for gold, and you know, silver is suffering. I'm telling you, silver is suffering because of the economic fears, just like last year. I'm going to show you something. These cycles repeat. All right, they repeat. Watch. When did the Fed start easing? Start tightening. They started tightening in April of 22. All right, and this is silver. the economy is going to do bad. The economy is going, and there's like little short squeezes we had as we went into buy season. And there was like, oh, wait a minute. The economy's doing fine. The economy's doing fine. And this, I don't know what this is, but this is, it is what it is. I think this is the stock market took a dive and silver took a dive with it. See how that works, right? And then it came back. And now we're looking at this. See this here? From, let's say, from here, from August to here, that is this. Same thing, although it's not as bad, but I want you to look at that. This is the recessionary fears keeping silver down. But look at how much they kept silver down last year, right? We're making a higher high at the most bearish time, higher low, I should say, at the most bearish time of year. And we're entering into the most bullish time of year. I don't want to be a cheerleader. I just want to say to you, you don't want to be long gold. You want to be long silver in the next leg higher.
Vince's analysis strongly indicates a forthcoming rally in precious metals, particularly suggesting a significant surge in silver prices in the event of lowered interest rates. Notably, the next Federal Open Market Committee meeting is scheduled for December 12 and 13, 2023. Recent sessions have seen a remarkable upward rally in silver prices, surpassing the $23 mark and maintaining its position above it. This shift is further influenced by the decline in bond yields, a trend influenced by key decisions from two vital financial entities, the Federal Reserve and the U.S. Treasury. Vince asserts that a persistently underperforming bond market could potentially weaken the dollar's value. In such a scenario, a weaker dollar might serve as a catalyst, propelling the upward movement of both gold and, notably, silver. Currently, silver prices hover below both the 200-day and 50-day moving averages, set at $23.38 and $22.86, respectively. This situation indicates a potential consolidation phase as silver trades within this specific range. Let's get back to the interview.
With what happened the last 2 months, the bond market got slammed, and what you saw was the gold market, silver market, the dollar went up. Then the war started and people bought gold. They bought a little silver, but they mostly bought gold, right? And the bond market turned around. This is what's going to happen according to UBS. If the bond buying continues, then the people who buy bonds will sell dollars. So it's like, I have dollars, I buy a bond. It's like you're getting out of dollars. You're getting the security, getting the asset. And if the dollar goes down, that's going to add more fuel to the fire with gold and silver. Even more in silver than gold this time. The whole constellation of markets, the whole spectrum, is behaving like we're going to be in a recession. Now, I'm telling you what's going on, and this is what's going on as long as there's no new item, no new war, no new peace, no new exogenous driver. The economies of the world are close to recession. The U.S. market is taking that as a cue that not only will the Fed stop hiking, which they pretty much have done, but they'll start easing very soon, as Hartnett said. When that happens next year, stocks will rally, of course. Bonds will rally, not of course, but okay. And precious metals will rally. Why? Because everybody shorts silver as an economic hedge against war gold. Silver's going to scream when they lower rates next year. I don't know when they're going to do it, but I'm telling you, the market is set up for that. Everyone is like, buy gold, it's the end of the world. And the other guys are going, well, let's sell some silver because the economy stinks. And then when the economy turns around, I'll be like, buy silver, buy gold, buy silver more, buy gold. This is going to happen. It happens every year. All right, so here's the total return performance of major global financial assets in October in local currency. Local currency for us is dollars, right? So gold, well in first. Silver, which, let's face it, really has lagged behind gold this month, right? And it's number 2 in the world. Think about that. That's not a bad number 2. So gold gets the gold, silver gets the silver. All the way down here, you've got oil getting killed. You've got stocks in the middle somewhere. And there you have it. Here's the same thing in US dollars. That moves silver to third. But what you're looking at is when you look in US dollars versus local currency, you're looking at the inflationary effect. That's why Russia's a little bit higher. They've got their own problems. And here's gold year to date in local currency. And there's silver down there. See that? See, that's a rough year, right? Right? That's rough for silver compared to other markets. And that shows you that right now the demand is safe haven. Right now the demand is recession hedge, right? We're going to have our way very soon.
The general consensus among analysts is that silver could hit $30 per ounce this year and jump higher quite quickly, as has happened in the past. Some forecasts suggest a range of $30 to $50 per ounce. Will silver's potential trajectory lead to a breakthrough of $30 per ounce and possibly surge even higher? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.